Morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast, a fresh view week, and we have a lot to catch up on as far as the weekend cues and news from the global markets is concerned. So as always, let's take a look at the Asian markets. They're largely lower, mixed so to say, but more towards the red side as far as the moves are concerned. So the Hang Seng is down 2% as we speak, the Taiwanese index down 1%, and all of them are taking cues from the US markets, where the jobs data at 5,17,000 jobs being added is way higher than what the street was working with, and this is increasing the fears of further rate hikes in that particular market as well. So that's the reason Asian markets are lower in trade right now. We do have Nikkei, which is high by 1%, but apart from that, it's mostly red on the Asian screen, and SGX Nifty, as a result of all of this, is indicating that yes, the start for our own markets could be in the red, though a 20-point downtick is what SGX Nifty is indicating, but it'll be interesting to see because we did see a sharp recovery in last hour of trade in Friday's trading session. And in the US markets now, Wall Street ended Friday's session lower following a strong jobs report for the month of January. The Dow Jones ended with 127-point cut, while the S&P 500 ended 1% lower. Tech-heavyweight Nasdaq Composite was the underperformer, falling by close to 1.6%. For the week, Wall Street ended mixed, with the Dow Jones closing largely flat, the S&P 500 ending the week 1.6% higher, and the Nasdaq also gaining 3% higher. On that note, let's tell you all about the keenly watched jobs data. The US reported surprisingly strong numbers for January, with non-farm payrolls increasing by 5,17,000, breaking analyst estimates of just 1,87,000. CNBC's Steve Leisman filed us this report.
Threats of inflation potentially coming from an historically strong job market, also dialing back the chance of recession. Here are those numbers that kind of created a pit in my stomach when, like, you go down a roller coaster. I just couldn't believe it. Up 517. Estimate was 187. That looks laughable in retrospect. And then really strong revisions. And there's other strong leading indicators in this report, but the strong revisions is one of them. Up 71,000 in the past. Unemployment rate. Part of that is due to a benchmark revision in the population survey, but it's still low, lowest since 1969. And the good news here, which kind of works against the Fed, average hourly earnings up 0.3, the annual rate coming down to 4.4, and it's very important to look at that hours worked, 34.7, up 0.3 from December. That declining hours worked was something people pointed to and said, you know what? The job market is weakening because of that. Well, guess what? It's right back up. Leisure and hospitality is still trying to claw back the jobs that it lost in the pandemic. Healthcare back strong, 79,000. Government, that's state education workers, not on the federal level, up 74,000. And surprising from the goods production side, goods producing side, 46,000, with construction up 25, manufacturing up 19. And another positive indicator of the future, temporary help back up 26,000, had been pointed to last month as being weak.
Okay, all right. That's the global market action. How will these overnight cues impact our own markets? We have our research team joining us to tell us just that, what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Hi, thanks for that. Well, in terms of the global cues, the US markets did close lower on the back of that jobs report, which was better than expectations, and Asia is mostly in the red on account of that. For us back home, recovery was really led by the financials on Friday, so that continues to be in focus. State Bank of India did report what was improvement in asset quality post-markets on Friday, but the Adani stocks continue to dominate sentiment. So there is multiple pieces of news over the weekend. S&P cut its outlook on Adani Ports as well as Adani Electricity. SEBI issued a statement on unusual price movement in stocks of a business conglomerate. We are assuming it is Adani. State Bank of India has indicated that absolute exposure is around 27,000 odd crores, but they do not envisage any challenge in their ability to service the obligations. So these are important statements which have come out for Adani. We do have numbers from that stable today as well. Now, stock-specific action, despite the fact that the SGX is indicating a soft start, will continue for our markets. Besides Adani and besides banks, which would be in focus, there will be number reactions from the likes of ITC, Tata Power, Emami, Marico, Thyrocare. The list will come up for you. It's almost never ending in terms of result reactions as well as news reactions from the likes of Vodafone as well as the windfall gain tax revisions which have taken place. The big Q is the RBI meet, the first of 2023 this week. FIIs continue to net sell. Levels to watch: the 100-day moving average for the Nifty and the Friday intraday low, which would probably be a near-term support of 17,584.
Okay, all right. That is the market setup. Thanks, Ekta, for that. A lot of stocks that we'll be focusing on. Vivek is here with that list. Hey, Vivek, good morning.
Well, good morning. Well, to add to what Ekta had to say, quite a lot of stocks will react on the back of results. A lot of results that came in over the weekend. So first on our list, of course, would be SBI. Strong beat as far as the consensus as well as the CNBC-TV18 poll is concerned. NII coming in very strong, close to 38,000 crore. Also, ITC will remain in focus. Very strong set of results, especially led by very strong recovery as far as the cigarette volume growth is concerned. The implied cigarette volume growth of 15 to 16% versus the expected 8 to 11% growth on a year-on-year basis. Also keep an eye out for M&M Financial. Strong beat to the CNBC-TV18 poll. Profit coming in close to 630 crore versus the poll of close to 360 crore. Tata Power too, you have to look out for the quality of earnings in this one as well. Very good set of numbers, above estimates on all fronts. When you're talking about the results, mainly aided by the fact that the coal mining JV did very well this time around. Keep an eye out for JK Cement. It's been a subdued quarter from the company this time around. High cost inventory hurting the margins. So EBITDA is down almost 29% on a year-on-year basis. On the other hand, from the cement pack, Dalmia Bharat managed to exceed expectations. EBITDA up almost 57% on a year-on-year basis, thereby aiding PAT to go to 204 crore versus 84 crore last time around. Also keep an eye out on the telecom pack, Idea as well as Indus Tower 2, an indirect beneficiary. The government has asked the AGR dues of over 16,100 crores to be converted into equity shares, thereby removing an overhang from Vodafone Idea. Keep an eye out from the OMC stocks as well on the back of the revision as far as the SAED taxes are concerned.
Okay, all right, that's a long list. So, Vivek, thank you so much for joining us with all those details. Finally, let me go across to Mangalam, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So, on Friday, we saw a big recovery in the markets, almost 270 points from the lows on the Nifty, and that coincided with a massive recovery that we saw in all the Adani Group stocks. In fact, the Adani Ent was up almost 60% from lows on Friday itself. As a result of which, if you just take a look at the way the index futures behaved, the open interest actually saw a correction of almost 6.5 on the Nifty to 8.5 on the Nifty Bank, telling you that there was a fair amount of short covering, and that's what data confirmed as well. We had 2,350 crore worth buying by the FIs in index futures and 27,000 short contracts being covered. In fact, the FI longs are now at 19%. Of course, still a massive outperformance as far as the short outweighing of the short positions at 81%, but there is inching of longs a little higher. The India VIX was lower by almost 8.5% as well, and that's telling you that there was a fair amount of put writing, and that for me is the biggest positive that we saw on Friday's trading session. The FIs wrote almost 1.74 lakh puts as against 17,400 calls, so nearly 10 puts written for every call that was written. Where were those puts written? 17,600 and 17,700 saw the most amount of put writing action. 17,800 put writers were rather active as well. That brings your first support to the Friday low of 17,584, from where we saw a near 270 point rally on the Nifty. 17,557 is also the 200-day exponential moving average, a mark that has been proven to be a bit of a support in the recent past itself. However, on the way up, now that the SGX Nifty has indicated its start, we will watch out for a few congestion points as well. The 20-day exponential moving average is 17,887, whereas the 50-day exponential moving average is 18,000. So there is where we can see some congestion. In terms of stocks, watch out for the Adani Group stocks. Ambuja Cement is out of F&O ban, so some action expected out there, whereas Adani Ports is still in F&O ban.
Okay, all right. So that is the futures and options space. Thank you guys for joining us and prepping us up for this trading day ahead. Welcome back. Let's move on to a Network 18 exclusive now. Finance Minister Nirmala Sitharaman reacted to the Adani crisis, speaking exclusively to Rahul Joshi. She said the exposure of LIC and SBI to the Adani Group remains within permissible limits and that Indian regulators are stringent about governance practices. Listen in.
Both SBI and LIC have issued detailed statements, and I know the chairperson of the CMD has himself come out and explained how they are not overexposed or whatever they said. Yes. And also said, look, we are sitting over profits for the exposure that we have, which is well within the limit. That's what I understand they have said, and I've again read it through the media. They have very clearly said that their exposure is very well within the permitted limits, and that they are even now, with the valuation falling as well, they are still sitting over profit. India remains as before an absolutely well-governed, stable government, and also very well regulated financial market, and as a result I think the investor confidence which existed before shall continue even now. Our regulators are normally very stringent about certain governance practices, and therefore they should, one instance, however much talked about globally it may be, I would think is not going to be indicative of how well Indian financial markets are governed.
Okay, all right, that's the word coming in from the finance minister. And on the macro, she expects the declining trend in inflation to sustain and that the fall is not a momentary affair. Listen into what she had to say.
The way in which inflation has come down, both by RBI's action and by the government's action, and the government's action has been steady and at it for some time. So I expect, since the fall in the inflation doesn't seem to be just a momentary or a 1 month affair, it should sustain itself in the process of coming down.
Okay, in some relief now coming in for Vodafone Idea, the government has approved conversion of AGR dues worth 16,133 crore rupees into equity. Conversion of shares will be done at 10 rupees per share, and post this, the government will hold 35.8% stake in the telecom company and will be the largest shareholder. So let's listen into what the finance secretary had to say on this. Listen in.
This is an exceptional situation. This is not, these shares will not be held by Ministry of Telecom. They'll be held by the Department of Investment Promotion and Asset Management as a minority holding, in the manner that they still hold shares, for example, in ITC, in Axis Bank through the SUTI. So there are residual situations. When UTI was rescued, the government ended up holding shares in a number of private sector companies. So it is in that manner as a minority shareholding managed by the Department of Investment and Asset Promotion. It's not in any way a PSU, or, first of all, even the stakes are much lower. But there is no intention of running it as it's an investment transaction.
Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to talk all about commodities now. A lot of updates there over the weekend and overnight as well. Manisha Gupta is joining us with that update. Hey, Manisha, good morning.
Morning. Thank you so much for that. Well, I'll start with gold prices because we did see $1,970 per ounce of a high in the previous week, and we're trading at around $1,870 right now. So it has been nearly $100 of a decline coming in for the gold prices. We did see 2% decline in the previous week itself, and this has been the worst week in 7 months, really, that we have seen in case of the gold prices. So focus now, of course, will be on the Powell speech on Tuesday, but the markets have taken it on the chin because of the U.S. jobs data, which came in much better than the street expectation. Hotter than expected jobs data and a sharp appreciation in the US dollar index have led to decline not just in gold but silver as well, which fell 5% on Friday. Sharp declines is what we've also seen in case of the crude oil prices. 7% of a cut in the previous week has taken the crude oil prices now to near 3-week lows. The natural gas prices are trading at a 2-year lows, and we saw 21% of a decline in the previous week for this one as well. So sharp cuts coming in across commodities. The strength in US dollar, hotter than expected US jobs data, and the expectation that the US Fed has a more playing field now really seems to be weighing on.
Okay, all right. That's the update from the commodity markets. Manisha, thank you so much for joining us with that. And with that, it's all we have on Power Breakfast today. Stay tuned. Bazaar Morning Call comes up next.